Okay, Jim. Well, we have to get your thoughts on crypto before we go. I mean, here's a look at the Bitcoin ETF. So a bit of a proxy there. GBTC is something else that we can pull up in MarketSmith. Um, your thoughts on the crypto winter that
Could
we're
we
seeing?
flip this chart upside down? Because I like it
Yeah.
a lot more.
They're coming out with a short. There's
I
Bitcoin.
know.
It
How
just
about-
came out, but there won't be any kind of chart on that. But yeah,
How about that for a signal?
yeah, exactly. Yeah, I know
right.
exactly.
I think before we talk about my opinion of this, let's talk about what it is. I don't know how many people understand the total market capitalization for every crypto, 15,000 of them roughly, is about the size of Microsoft, the total market cap. So you need to understand this is early stage venture capital, which pretty much stays private until they're much larger. But because of the decentralization, the public has been able to get a shot at deals that they would never ever see because it's democratized. It's not like Goldman Sachs hands out Ed, 10,000 and me 100,000, and they just chop up the whole deal between 40 guys. And we get the opportunity and the other people don't. The crypto world gives everybody equal footing. Now, the downside is there was a ton of people who got hyped up and they bought white papers, which if you don't know this, a white paper is an idea. And a lot of these white papers got funded with hundreds of millions of dollars, and they were either just no code had been written, it was an idea. They're all being washed out. All the scams are being washed out. This is the year 2000 moment where all of the .com, you had a company, you added .com, and it was pets.com and pharmaceutical.com, and they all got washed out. We're in a washout moment, but it's a moment in a market that is fairly illiquid. Okay, like I said, the market cap is about the size of Microsoft. So it's really dangerous to have venture capital liquid, because when you have super duper thin names, micro caps, managing risk with size is almost impossible. You can with Bitcoin and with Ethereum, but these other outside altcoins are really risky. And I just want to tell you, a great method for dealing with this is, first of all, I think this is going to be as big of an opportunity or bigger than the internet. And I'll just quick stat. Anybody want to take a guess in 1997 how many people had an internet, who were on the internet? Just take a guess.
In 1990, when? 1997. 3 million. I don't know.
147 million. 147 million. In 2007, 3.7 billion. Okay, that was one of the fastest adoption curves ever in history. The blockchain is faster. All right, so when you understand those fundamentals, to lose patience is to lose the battle. This is a winter, but it's not unheard of. Bitcoin has had 70% pullbacks. This is venture capital. It's kind of like if your house falls in value, do you know it? If your venture capital is just super liquid. And what this is liquid venture capital. With that said, forget my opinion. Stan Druckenmiller at the Schoen conference twice said, if you want to know about the future, study crypto, study blockchain. If you look at where all the kids from college and the smartest are all going, they're going to crypto. Some are going to investment banking, but the big move is into crypto. Mm-hmm. I just say, control your emotions, have patience. This is coming. Bitcoin will come back massively. We have a halvening in about 2 years, and we don't have time to go into what that is, but it's been a bad bear market. We've had worse. It needs maybe more time. So you've had a double whammy here. The Fed is crushing all venture capital, all no earnings growth companies, inequities in traditional markets. But in crypto, we've had a Mount Gox moment where we had 3 arrows blow up, Luna blew up, Celsius blew up. And it's kind of like Warren Buffett, his maxim or saying is, when you're swimming in the water, it's all chill, but you don't know who's naked without a swimsuit until the water rushes out. When the Fed crushes liquidity, squeezes, there's a shortage of dollars in the world right now. That's how you came up with Enron, long-term credit, WorldCom. There's going to be more blowups. And if the Fed keeps raising rates, we're going to have some blowups in the equity world, in the traditional finance world. So that's why we haven't seen those just yet. But if the Fed keeps raising, we're going to see it. We've already seen it in crypto, which means crypto is way ahead of equities. Crypto, in my opinion, it has bottomed, or it certainly will bottom way before traditional equities, because crypto is the only true free market. There's no central bank intervention supporting it. But yet, a week ago today, the mortgage-backed market, one of the largest bond markets in the world, seized up. It went zero bid. That is a sign of real liquidity shortage. But what did Bitcoin do? Block after block after block. The price you may not like, but the market is functioning way better than the bond market. So I have no doubt. I mean, I don't like the value of my account or my hedge fund has been hammered. It's one of the biggest losses I've ever taken, or drawdowns for sure. But I'm patient. I'm chill. I've been there. I sat through the 2018 bear.
So you can treat it a little, your approach, you're coming at it a little differently because you were a lot earlier in this. But, for people on the sideline now, I mean, there's no reason why you can't use, at least loosely some CAN-SLIM trading rules to find spots to get in. I mean, we were talking about that in 2020, you can use CAN-SLIM buy and sell rules for something like this if you wanted to, if you didn't have that same kind of approach that you are taking with it.
I don't like these ETFs. I think GBTC is trading at a 30% discount to fair value. You get 120, 30% of the downside and 80% of the upside in these things. These things they're not fungible. They aren't convertible. They're not real ETFs. They don't mark to market. So I want people to buy the real coins, the actual coins. I want you to custody them yourself. Do not hold them on an exchange. You remove the probability of being hacked. I want to equate this to the end of the bear market in 1982. You want to buy housing when rates are at 14% mortgages, when you can't, when no one else can. Because when rates come down, it's difficult to buy when rates are at 14%. So when rates come down, housing went wild. Crypto's a pain in the ass. Okay. You have to jump through a lot of hoops to make it happen. When this becomes super easy, like you just go on Robinhood and click and anybody can do it, that will be a much more developed market, and a lot of money will be made by then when a lot of these solutions are implemented. People talk about scaling a lot and it doesn't scale. Well, the first internet email was called Hotmail, and they couldn't handle 500,000 emails a day. Just for 1 second, fathom that. And look at how many emails, billions of emails go out daily. Crypto is going to scale. Patience, developing market. This is the biggest opportunity I think I've seen in my life. You need to go down the rabbit hole and really understand the fundamentals. And this is something that is such an enormous topic. I mean, it took me 2 years of reading every night to get there.
Yeah, there's no way we can discuss it all in the next 5 minutes. But one follow-up question for you would be, and this is something that we've talked about internally, is if that bull case scenario for all the applications comes to fruition for the coins and blockchain, traders like the coins right now because of the volatility and because of the big moves. But if it does become that a widespread of a currency, is it going to have that same volatile nature that people love trading it for?
Look, I was a retail broker. I started at Morgan Stanley or whatever, doesn't matter. I was at Morgan Stanley through the IPO boom for the 2000. Most people lost money trying to catch these little tiny moves. They're day trading for $5, $10. Read Livermore's book. The money's made in the big swing. Okay. This is a emerging technology which is going to change the world. It's already changing the world. I don't care about $5 ever, even in equities. I am more of a big game hunter. And I often sometimes get caught in stale longs because of it, but I'm not in this for trading. I'm not in this for volatility. I wish it didn't have it. It's something that I have to endure to make the big move.
But I think
Fortunes are
what
gonna be made.
Allie's asking is, so Jim, do you trade the dollar? Do you trade the pound?
No, but I'm looking at the ETFs because I think we could be getting into a world like that. But go ahead.
So that the thing is, if these succeed and become true currencies, I mean, they have to become
More stable.
Then they can't be flailing about and losing 20% in a couple days, because how can you use them for purchases and things like that? So I mean, it seems like if they succeed, then no one will want to trade them anymore. They'll be working as a currency, but not as a speculative investment.
All right, I don't see that. Bitcoin is programmable money, but clearly much too volatile to be an asset on a balance sheet.
Mm-hmm.
I'm looking at other, let's not call them coins. Let's call them software companies that are venture stage. I think it's very possible that I'm not looking at it as I don't look at this as going to take over the US dollar. I look at this as the internet all over again. This is the new internet. This is going to crush insurance companies, banking. It's going to open up the world to people who are impoverished, who have a cell phone and no bank, the unbanked. But I don't believe Bitcoin may or may not become a currency. It may become the currency of the blockchain or the digital world. But I'm looking at this as software innovation, like the new Priceline, the new Amazon. Mm-hmm. The currency's possibility, clearly it's too volatile for that at this moment. But I think it's yet to be seen. We are so early in this. Again, remember, this is smaller than Microsoft combined, the whole market cap of it. But you're 100% right. Simple currency, too volatile, not going to happen, at least not in the next 5 years, 10 years. Crypto is the only true free market. There is no central bank intervention. It's open 24 hours a day. Currency markets are not free. This is the only free market in the world. And that's why it's going to bottom way ahead. But you go down the rabbit hole, look at the utility, listen to Stan Druckenmiller. Don't listen to me. Listen to the smartest people in the world. They're all, their family offices are engaging in this. Listen, nothing's bulletproof. I could be wrong. I'm more wrong than right, but I am looking at this differently than equities.
For those who do have more of that cancel approach, I mean, there's a time and a place for things. If you want to wait for the crypto winter to end and you still want to be involved in crypto, well, I mean, it's headed down right now. Maybe you can approach it differently and think about it on sale, but we apply a different mindset to the other things that we trade. But it's at the end of the day, it's a fascinating conversation. And Jim, it seems like you've been on the cutting edge of this in it for years. So that's awesome.
I don't want to be misconstrued. I don't buy downtrends. All right. I have not added, but I have held through all of this. I need a higher high and a higher low in just about everything I buy. And no, in everything I buy, it's got to be in an uptrend. So I'm not condoning buying here. Okay. But I am looking at this like venture capital, and it's really difficult to risk manage that.
Hey everyone, thanks so much for watching Investors Business Daily on YouTube. If you want to watch more videos, make sure you hit that subscribe button so you don't miss a thing.